Good morning, everyone watching live on BAM YouTube. Let me know in the comments where you are tuning in from. The Hot Sheet covers what you need to know about the real estate industry in a 24-hour time period. On today's Hot Sheet, I will discuss an update on mortgage demand, including how many homeowners are locked into mortgages below today's rates, plus what economists are saying about housing inflation and Sternlight's sale. Today is Wednesday, June 14th, 2023. I am Byron Lazine, and the Hot Sheet starts now. Thank you to everyone joining me here on this Wednesday morning on the Hot Sheet. I really appreciate the live viewers, the commentary that we get live every single day. Of course, this is the only housing show on the internet that goes live every single day that the markets are open. So basically every Monday through Friday, 9:30 a.m. Eastern. And Bobby, the BAM lead producer, sitting right over here to my right.
Right over here.
This hard working gentleman. He just let me know that this is the 100th.
The 100th episode of the Hot Sheet.
The 100th episode of the Hot Sheet. We launched it in January. We wanted to do something different, something unique with our content that nobody else is doing. And we did that. And so congratulations to the BAM team. We're going all the way through here, and we're going to continue this year. So share this with somebody who wants their 24-hour look back every day on housing. Make sure that you join the BAMX community. Today's the last day. We're going to do 15% off on the discount code here to celebrate episode 100. So last day, 15% off the annual subscription on the discount code for BAMX. That gets you into the after party tonight for our cold call event. There's a link down below for that as well. 4 o'clock, we're doing past client cold call event. We're going to do an after party on BAMX. If you use Hot Sheet today, last day, you get 15% off the annual for that. All right, let's get into the news of the day. We've got a mortgage application update, and mortgage demand is up finally after weeks of going down. The average contract interest rate for the 30-year fixed mortgages was 6.7 to 6.8 the previous week, so that helped a little bit off of 6.9. I know we've been still hovering this week around 6.9, so we'll see where that goes here after today's announcement by Jerome Powell. But applications for a mortgage to purchase a home increased 8% for the week. They were 27% lower than the same week 1 year ago. Applications to refinance also rose 6% for the week, but were 41% lower than same week 1 year ago. So application volume rose 7.2% last week compared with the previous week. Again, 8% in comparison to the same week last year. This is all according to Mortgage Bankers Association seasonally adjusted index. The average contract, again, was for loans 20% down payment, was in that 6.7 to 6.8 range that we saw. What are you seeing with your buyers, real estate agents? This is obviously good news for real estate agents that applications are bouncing up a little bit here in June. In June, sometimes you can see them going down as we get out of the spring market, but we've been having early signs of down demand. What are you seeing for in your local market, the average interest rate for the buyers that you're locking in? Is it in that 6.75 range? Is it up closer to the Mortgage News Daily survey where it's getting closer to 7, or is it lower than 6.75? Love to know what you're seeing buyers lock in at. There's not as much credit available for buyers. Mortgage Banker Association also reported yesterday that mortgage credit availability decreased in May. This is something to consider as we see, mortgage applications and demand much lower than last year. And certainly sellers are still in the driver's seat. Sellers have full control of this market right now. But there's less credit available for the buyers who do want to buy a home. And there's obviously high borrowing costs. So as these continue to, stack up over the months, this will have an impact on, sellers' ability to have full control. Remember, Zillow and others have reported that if we get close to 7 and 8% for a long period of time, they believe that home values will go down. We haven't seen that yet, right? Home values have been going up the last few months, but we did see it in quarter four and quarter three of last year. So mortgage credit availability, the mortgage credit that's available to home shoppers, decreased in May, according to Mortgage Credit Availability Index, MCAI. It's a report from MBA that analyzes data from ICE Mortgage Technology. So the MCAI, this Mortgage Credit Availability Index, fell by 3.1% to 96.5 in May. The decline in the MCAI indicates that lending standards are tightening, while increases in the index are indicative of loosening credit. Okay, the index was benchmarked to 100 in March 2012. So that's when the index was benchmarked, March of 2012, when we were basically coming out officially of the great financial crisis, like true bottom, March 2012. Okay, here's your benchmark. It's 100. We're below that right now on credit availability. We're at 96.5. There was more credit available in March of 2012, which is just right out of the great financial crisis. More credit available then than there is today. So for all of those doom and gloomers that believe, oh my goodness, 2008, it's coming, run for the hills. Listen, there's not even as much credit available as there was in 2012. Never mind the years that were preceding up to it. Here's a look, and all of our sources and charts will be available for you in the daily download. Here's a look at conventional versus government versus conforming versus jumbo. All of them are much lower than years prior for credit availability and continue to fall even lower. Here's the mortgage credit availability index level by month, now at 96.5. We haven't seen, anything this low since, you got to go all the way back to, that 2012 timeframe. So if you look at March of 2012, we were at the benchmark of 100. Then it dropped down the end of 2012, and since then we haven't dropped below 100. We just haven't been below 100 at any point in that time period. In fact, 2019, we were up over 185. If we zoom all the way out, when we take 2004, 2005, 2006, and 7 into consideration, we were up over 800, close to 900 on the index. So 96.5 compared to 900, we're talking about mortgage credit availability during the peak of the mortgage crisis. It was 10 times easier to get a mortgage back then than it is today. Just another strong signal that we're nowhere close to a 2008, catastrophe when it comes to, people getting loans that shouldn't have them, and then foreclosures. Again, I mean, to be able to debate the father that shows up to, the showing and says, well, 2008's around the corner. Okay, well, I'm certain you went through 2008 like a lot of us did, and I can appreciate that perspective because those are scary times. I know better than anybody. I lost 3 homes during that time, right? And so that's a great opening so that he knows that you understand, right? And then you want to hit him with the facts. But let me ask you, have you looked at the credit availability? And it was 10 times easier to get a mortgage. There was 10 times more mortgages available to home shoppers in those years than there are today. And today, in fact, 42% of homes don't have a mortgage, right? And 33% of homes being purchased right now are all cash. These are 3 different stats that you can basically now, after your opening conversation with that father, follow up with a question. So do you think that in today's scenario, you're going to see homeowners go ahead and sell their home at a discount when 42% of them don't owe a dime on it? Do you see that coming? All right. And then the tune might change a little bit with that father or that uncle or whoever who's just trying to like throw, curveballs at you and see if you can hit them or not. Right. So being able to, that's like some Phil Jones stuff right there. OFQ, opening fact question. We're going to talk about that tonight, by the way, on the past client call event. So 4:00 here on the channel. Make sure you're subscribed. Make sure you're a member of BAMX so that you can come to the after party. We're doing another cold call event 4 p.m. Eastern. You definitely want to be a member of BAMX so you can come to the after party for the Q&A, but you don't want to miss that. Those are always a good time. All right. 90% of borrowers, speaking of mortgages, have a below market mortgage rate. This is just reported this week in Fortune. It's keeping housing inventory very tight. Obviously, we've reported this. This is another fact that when people are looking at, okay, well, people can't afford these homes. Well, 98% of them have a below current mortgage rate. Okay, so 98% of current homeowners are not impacted by the housing inflation that we're experiencing right now, by the mortgage inflation that we're experiencing right now. Again, 42% of homeowners don't even have a mortgage. So it doesn't even apply to them that the rates are at 7%. They could care less. Okay. So the housing market, it's obviously been a wild ride over the last few years. I would call it more complex than wild. Home shoppers and home buyers and home sellers don't like the term wild, starting with the pandemic housing boom, a short-lived era of low mortgage rates and surge in demand as people shifted to remote work, and ending with a correction that's lost steam. So still 98% though of the outstanding borrowers have a below mortgage rate. It's according to the estimate from Goldman Sachs, and that's constraining both sides of the market. So look no further than your own market right now. When you're looking at the inventory issue and you ask homeowners and people who are thinking or are on the fence or are future pacing for a potential sale, look no further than them to say, hey, what's your current interest rate right now? And you're going to hear a lot of 2.5, 2.75s, 3.5, and 4s. It's very difficult to unlock that inventory. Mortgage rates were previously below 3%. They spiked to above 7%. And currently, right now, they're hovering around 7%. What was yesterday's reading? Let's just take a look at yesterday's Mortgage News Daily reading. It's at 698. Okay, so yesterday we came in at 698. The day before at 694, 692 the day before that, 69 on June 8th. That's where we're at right now. The Freddie Mac, we just referenced this in the prior topic. The Freddie Mac weekly was at 671. Okay, so their weekly report survey came in at 671. So we're talking about 6.7 to where we've been at this week, which is basically just under 7. Love to know what your local lender is getting you in your market currently right now. Drop that into the live chat if you've got any data on that the last couple of weeks. But this is this is much different than where these buyers and homeowners locked in, and you can see that on the new listing data, right? This is the new listing data right now. We talk about it every single Monday. We're trending near all-time low when it comes to new listings coming onto the market. This is worse than 2022. It's worse than 2021. This is the biggest impact on our homes. So 98, another data point, another fact to point to for those that believe housing is maybe not a good investment right now, or that there's a cliff coming. 98% of current mortgages are below the current market rate. Okay. And it's those numbers. It's the 42% of people that don't have a mortgage. It's 33% are buying right now with cash. It's the credit availability being 10 times less than it was in the 2004 to 2007 years. It's these little quick points that we need as real estate professionals to use against the wave of mainstream media consumers that are just seeing headlines and think 2008 is coming. These are the types of conversations and facts that we need to deliver when we're having those discussions. Economists are discussing housing right now, and they say it's a near certainty that housing inflation will soon fall. I'm in line with this. Barry Sternlicht, who I'm going to mention here to wrap up the show, he's in line with this. Barry Sternlicht, CEO of Starwood Capital. They own 125,000 rental doors. They model this across America. He's also in this camp. Okay. We talked about it yesterday. We broke down the CPI. If you missed yesterday's hot sheet, go back and listen on Apple or Spotify, or do the replay on YouTube. Shelter, it's the largest component of the consumer price index. It's over 33% of the CPI. So it makes up over a third of inflation, which is the Fed is trying to get from 4%, where we were currently at yesterday, the lowest in in 2 years, down to 2%. It's got to be 2. Can't be 2.2, can't be 2.5. It's got to be 2. That's the fight against inflation. We're going to see what Jay Powell does later on today when he has his talk. We'll be covering it all tomorrow. All right. But shelter makes up the biggest component of the CPI. We broke it all down, the latest report yesterday. Go do a re-listen on that if you missed it. Okay, so the category of shelter, of housing, of rental has a huge influence on the overall inflation and how the how the Fed is going to react with when they make these decisions, like the one they're making today on whether to increase or pause the federal interest rate. All right, so housing trends feed through the CPI with a substantial lag. Okay, so I've been talking about this lag. It's a ridiculous model how they get housing trends through the CPI. They call homeowners, it's like a 1980 thing that they came up with. They call homeowners and they survey them at their house. Okay. Who even has a house phone right now? And if you have a house phone, I guarantee you've been living in that house 20, 25 years and you don't know what the market rate for rentals is in your market because you've been living in your house for 25, 30, 40 years. And those are the people that still have house phones. Nothing against that. Got some, got some friends' parents that still have house phones. Very lovely people. Love the house phone people. I still remember these numbers from when I was a kid. You may remember some of these numbers, these home phones when you were a child. Don't be typing them in case their parents still have them. All right, so housing is perhaps the most consequential category in the consumer price index. It's a key inflation barometer. As the largest expense for average U.S. household, shelter accounts for more than a third of the CPI weighting, the most of any other consumer good or service. That gives housing an outsized influence on the direction of inflation data. Of course, yesterday, this is where inflation was. Again, you can go back and listen to yesterday's if you want the full recap, but the consumer price index came in at 4%, less food and energy. We're at 5.3%. That chart, along with all the other stuff, is down below in the daily download. Okay, so there's your there's where we sit at today. Now, if you are in the camp that believes rental prices are truly coming down, okay, Redfin's in that camp with their data. They say right now, year over year, nationally, that rents are down 1%. Apartments.com, rent.com is in that. Barry Sternlight from Starwood Capitals in that camp. We did have John Burns consulting, and we talked about this yesterday, say that there were three major REITs that are saying single family homes are on the increase. We know that rents in the Northeast and the Midwest are on the increase, but we know in the West and in the South, they are going lower. Okay. But if you're in the camp that believes rents are truly going down right now, and that they're going nowhere but down before the end of the year because of the rush of inventory coming onto the rental apartment market. We don't have that in the sale market. I get it. But on the rental market, this rush of inventory that's coming on, if you believe rents are going to keep coming down, then you believe what Barry Sternlight believes, that rent prices are going to drop and inflation is going to drop and it's going to drop hard. I'll put this in the daily download. I've shared it a whole bunch already, but I'll drop it in there today. I know agents have texted me like, hey, I can't find that. Can you send it to me? That's no problem, right? This one here is one that I want in my back pocket. Barry Sternlight's got 125,000 rental doors. He models this across the country. And he says the year over year rent growth, and basically nobody can dispute this. There's major disinflation with rent growth, but yet CPI shelter, and we just showed it yesterday, CPI shelter says it keeps going up. So CPI shelter went up month over month from April to May. We broke that down on yesterday's hot sheet, and you can see CPI shelter just keeps going up. Well, once we get the data to catch up with this antiquated system that the feds use to kind of track this stuff, all of a sudden inflation is going to drop. You could have a 4% read, which we have right now, drop down to their stated desired rate of 2%. Okay. It can happen like that. Okay, so how shelter prices have changed, according to CNBC. Price changes in shelter were generally muted before the pandemic, economists say, but COVID-19 warped that dynamic. Sorry. Housing costs shot up, but have slowed and even started to fall in some areas. For example, Americans saw rents grow by 4.8% in May from a year earlier to about $2,048 a month on average nationally, according to Zillow rent index data. That's significant slowdown from the 15.7 growth during the prior year. So Zillow is saying, hey, it's still going up, but not nearly as significantly. That's that line that I just showed you with the Barry Sternlicht model, where it is going down. There are others like Redfin that are saying, no, it is, year over year down. We just talked about that Wall Street Journal article that's saying for the first time, renters are going to have the upper hand. For the first time, renters will have that upper hand since 2008. That was according to Wall Street Journal. I know this with about as high a degree of confidence as one could have. Mark Zandi, chief economist at Moody's Analytics, said of falling housing inflation being near at hand. Next July, when we get the next CPI report, that's going to be the year over year from the peak of inflation at 9%. That's the year over year mark. Hopefully, this data is going to catch up. This housing inflation data is going to catch up in that report. That'd be monumental if we're down with a 2 reading next month from 4% to 2. CPI isn't a particularly accurate gauge for housing. Hey, there you go, CNBC. We've been saying that on the hot sheet all year. This is episode 100. We've been saying it all year. Here's the problem. CPI doesn't capture the price trends in real time that Redfin's reporting, that Zillow is showing, that apartments.com and rent.com, they got more data than calling the little, old lady at her house on her home phone and saying, hey, well, what do you think rents are in your market? It operates with a substantial lag, meaning it can take 6 months to a year for a decline or an increase in current house prices to fully feed through inflation data. This is stupid. Why are we doing this? We have technology. We have CoStar and groups like this that have tons of data that they could share easily. You could just go online. You could just watch the hot sheet and get the data by the minute. It's not necessarily a particularly accurate gauge of what's going on in the housing market right now. Andrew Hunter, deputy chief U.S. economist at Capital Economics, previously told CNBC. So here's the reason for the lag. The U.S. Bureau of Labor Statistics collects rent data from sample households every 6 months. This is what we're talking about for a third of inflation. These little phone calls every 6 months. All right, so the BLS also divides these sample households into 6 different subgroups called panels and staggers when it collects data for each. Per the BLS, rents for panel 1 are collected in January and July. Panel 2 is in February and August, and so on. Okay, so it could take a year or so to collect data from the subgroups. We're talking about average Americans who are nice people, but are throwing out a guess on what it would their house would rent for. Hey, what do you think your house would rent for? Oh, I don't know, 2,800. I would take 2,800. This is stupid. Shelter is still playing a big role in inflation, but it should be slowing in the second half of the year. This is according to an economist at Harvard University. The latest CPI reading that we uncovered yesterday obviously showed that monthly increase in shelter to 0.6% from 0.4% in April. So this data is so old, it's so lagging, it's showing that shelter data is continuing to go up. A decline in CPI housing inflation is almost as much of a certainty as you can really get. There's an additional measurement quirk relative to housing inflation. The BLS tries to assess price changes for homeowners as well as renters in a subcategory called owners rent equivalent rent. This measure is essentially a survey that reflects the price homeowners believe they could get if you were to rent your home. It's somewhat tied to market rents. But listen, this is a really bad solution to figure out what those rents are. And if you believe that rents are coming down, then you're going to do what Barry Sternlicht just did, who I've spoken about a whole bunch here, Starwood Capital CEO, billionaire. He eyes a sale of more than 2,000 of their rental homes. Of course, they have 125,000 doors, so it's not a lot in comparison to what they own. But if you believe rents are going down, you might take a little bit off the top. Starwood is seeking to sell homes it acquired in 2021. This is according to Bloomberg. The firm is a major owner of rental properties in the U.S. Barry Sternlicht is exploring the sale of more than 2,000 single-family rental homes. He's selling at a peak in the market for the prices, and he's certainly selling at a time when he believes, when I believe, when others believe, rental prices are coming down. So if rental prices are going to come down, there's going to be an influx in inventory through the end of the year here. Why would I maybe hold on to some of these ones that have, accelerated so much in value? Many of the homes being offered for sale by Starwood Real Estate Income Trust are part of a portfolio acquired from Pretium Partners in late 2021. So you know that they got an instant pop on value on these homes. Pretium is reacquiring about 100 of the homes. People familiar with the matter said the homes are not being offered at distressed prices, and it's possible that Starwood holds on to the bulk of the homes in the end if they don't get their number. Okay. SREIT owned 3,200 single-family rental homes valued at $1.26 billion as of March 31st, according to a following. And it also recognized nearly 80 million impairment charge on various single-family rental properties during the first quarter on revised cash flow assumptions due to an increased probability of near-term disposition. Starwood REIT, with a net asset value of $12.8 billion in a portfolio concentrating in housing and industrial buildings, industrials, amazing to own, has faced higher redemptions in recent months, leading to the firm to restrict how much money the trust returns at one time. Similar funds sold to affluent retail investors such as Blackstone have also limited redemptions. Okay, so single family and multifamily, according to Sternlicht, doing just fine. This is on a conference call in May. The only issue right now in real estate is office, and some would argue that that trickles into overall commercial and downtown cities. We're seeing problems with San Francisco. I may talk about that before the end of the week. There's more reports there. But Starwood, being one of the largest landlords in residential, has ramped up its single family rental business during the pandemic. It's bought a bunch of homes like others have, and is now maybe looking to take a little bit off the top as they believe rent prices are coming down. They believe that's good for inflation, and they believe they've made a little bit of money on these properties. Sternlicht has said the Fed's campaign to hike rates, and this is where we'll kind of finish off episode 100, is bordering on idiotic. We will see what Jerome Powell does later today when they make that decision on whether to pause. And the majority of the market has, believes right now, and they have kind of priced into the market that we are going to have a pause. We're not going to have an increase on the federal interest rate. Typically, when we get over the hump here of the Jerome Powell speech, we will see a 10-year that comes down. Okay, we're hoping that this morning's trend is a signal for a drop in the 10-year. It's trending down right now. Hopefully we get what the market expects, and we have Jerome Powell go up at 2 o'clock or 3 o'clock this afternoon when he gives his speech, and he talks about a pause, a skip in this interest rate hiking. Now, what's going to be interesting, I think that's kind of baked into the cake. What'll be interesting is if he alludes to an increase in July, if he says we're wait and see, how hawkish is he going to be during this talk? That's where you're going to see the biggest impact on the 10-year. If we get a 10-year that can drop, then we can certainly get a 30-year that can drop and help affordability for home shoppers. Okay, last day today to get 15% off the annual subscription for BAMX. We're doing an after party after the cold call event later today. So if you want access to that, make sure you're in BAMX. Of course, we have our private Facebook group. All of our courses from BAM personnel, and as well as discounts on the BAM creator courses. Make sure you get into that. 15% last day on the hot sheet. I can't see hot sheet is the code. I can't see that comment there. If you can move it up. Bump that up. I don't know if it's a question or not. On the chart with actual rent versus CPI shelter, can you include a chart that gives a closer look month by month? You said the lag on the CPI data is 6 to 12 months. I don't know if this is Brett. I don't know, Brett, if are you getting all of the daily charts? Because we've shown a whole bunch of month over month rental charts here in the past. One thing we're doing, this is a reason to get into BAMX. Today's the last day for the 15% off the annual subscription, is instead of emailing these charts to everybody every single day with the daily download link, we're going to be putting these onto BAMX. So you're going to be able to go on BAMX, sift through, hey, was there a chart? I missed it. Or, instead of having to rely on every single day email, then download them, then save them somewhere, they're just going to be in one place for you. Okay. So if you haven't done BAMX yet, that's another reason, Brett, to go on there. Jill's working on it right now, where she's going to be uploading all this data. We hope it's going to be done by next week. Jill, if you're listening, this better be done by next week, where you're going to have all of the daily downloads from the hot sheet in one place. Also, we're going to take Q&A from the hot sheet and go and bring that into the BAMX community. So there's just a lot of content coming into BAMX, making it easier for you to organize, find, and get the stuff that you need when you need it. All right. Hopefully I'll see you today, 4 p.m. here on the channel when we go live on the cold call event. Of course, the BAMX after party at where we do all the debriefing and Q&A is going to move over to the BAMX platform, 15% off. Last day, hot sheet. Thank you guys so much for being a part of this community here on episode 100. Can't believe it, Bobby. Thank you to you and the entire production team that's making this possible here at BAM. And until tomorrow morning, or until today at 4 o'clock, toodaloo.